Joining us to talk about the economic issues between China and India is Anil Gupta, a professor with the Smith School of Business at the University of Maryland. Well, they're both members of BRICS. Are they friends? Are they competitors? How would you describe this relationship?
Both. And actually, I mean, as I look ahead, I think the prospects of closer relationships, more friendly relationships are better than even. So I think, clearly, I mean, it's like between France and Germany. It will always remain a relationship of both cooperation and competition. But I think there are many reasons to expect that the relationship gets a little better.
And both countries have been on fire, and yet there looks to be slowdowns. Is that going to impact trade in any way? Will it enhance opportunities or present problems?
No, I think, I mean, by and large, across the world, plenty of empirical research which points out that when an economy slows down, trade slows down. So I think when China and India both slow down, it will in fact affect trade. And if you just look at 2012 numbers, that was a decline over the 2011 trade figures between China and India. But looking ahead, if we look, China is India's #1 trading partner. India is China's top 10 trading partner. And looking ahead to, if we say 2025, almost certainly, and even at a 6 to 7% growth rate, India will be the world's 4th largest economy, behind China, US, and Japan. And in fact, at that time, India will almost certainly be one of China's top 3 or 4 trading partners from the top 10 right now.
Where do you see the areas of cooperation now, the key areas, would you say?
Well, I think the cooperation, I mean, certainly, of course, trade numbers are very big. And while China runs a trade surplus vis-a-vis India, but that also actually, in a way, tells us about cooperation. Why? Because bulk of what China exports to India are capital goods. And India's, if we say, what's the single biggest economic issue for India right now, or the single biggest economic to-do, a challenge, if you will, is infrastructure. And of course, what infrastructure requires is capital goods, machinery, and it requires capital. Chinese capital goods are 30% cheaper than those from Europe or the US. They are often accompanied by quite low cost Chinese financing. And so China's exports to India, while they create a trade surplus for China, at the same time, they help accelerate India's infrastructure buildup. So that is, certainly one element of cooperation. But, going beyond that, I think, in terms of exports from India to China, it's by and large, China is much stronger than India in manufacturing. So it's hard to imagine, a huge chunk of manufactured goods going from India to China, at least not anytime soon. But raw material, of course, iron ore and cotton, those have been historical. But looking ahead, India is one of the world's largest beef exporters. Large country, lots of cattle, not enough domestic consumption, if you will, of beef. So India is, Premier Lee and the Indian leaders, they just signed an agreement that China did not permit Indian beef to be exported to China. So that's getting relaxed. So that's another area. India is very strong in generic pharma. So those are kind of emerging areas of cooperation. But really, kind of the big thing that needs to happen, that's beginning to happen, is really investment. So right now, what's largely a trade-based relationship needs to become not just a trade, but also an FDI-related based relationship. And that's beginning to happen, but it's in the early stages. So currently, what we see in terms of flow of Chinese capital to India, it's largely in the way of loans. Loans to support a purchase of capital goods. Mm-hmm. Loans are fine, but ultimately, equity investment is a whole lot better.
Exactly.
And what's happening now is that for Chinese companies going global, and in fact for Chinese leadership, to help Chinese companies become global champions is one of the big strategic agendas. It's at the level of NDRC, yes, at the level of SASAC, at the level of the Standing Committee. And, as Chinese companies, be that Huawei, ZTE, Haier, Shanghai Auto, Shanghai Electric, Alibaba, Tencent, Lenovo, as these companies spread their wings
That's
and want to
exactly.
be global champions. Well, I mean, you got to slow down in US and Europe. That isn't going away anytime soon.
You got to find some place to go,
Exactly.
right? Yeah.
So therefore, India is becoming mission critical for these companies.
Right. Well, we're going to have to leave it there. Thank you so much for
Welcome.
illumination. Certainly
Thank you.
appreciate it.